So there are big changes happening, both in the laws and the rules that govern them. A lot of foreign direct investment is going to come in, especially since Trump is taking a strong stand. Bitcoin to gold hasn't lost its uptrend, but it has had a setback as Bitcoin has settled down. We think Bitcoin will keep going up over time. There was never so little money as there was that day. There is 18 months more money in circulation now, and a lot of people think that the inflation rate will follow. This is very important to the Fed. Wall Street is doing the exact opposite of what small investors are doing, which is making the biggest mistake possible while the Fed gets ready to cut rates. And this is when I see people make the biggest mistakes. They sell their stocks right before the markets get very liquid. I'm going to show you some numbers first, and then we'll hear what Cathie Wood has to say. Honestly, this is the silliest thing I've ever seen. You can see that private companies are now beginning to make money. Regular people sold more than $700 million worth of US stocks and coins. A sale they've had every other week for the past 3 weeks brings it closer to $1 billion. We bought for almost 36 weeks in a row before this. What is the reason why small buyers are selling now after buying before? We had a small rise, and now people are cashing in because they honestly believe this is it. The run is about to reach its peak. But the truth is that most people don't know what M2 and monetary cycles are, or how higher liquidity leads to higher stock market prices, or how the Federal Reserve plans to lower interest rates. This means that people are taking gains very early, and institutional investors are well aware of this. In fact, they bought more than $1.1 billion, which was their 6th buy in a row. Since the bear market in 2022, this is their best run. Retailers are selling and institutions are buying. Now that we know that, let's hear what Cathie Wood has to say about the next few days and weeks after the Fed cuts rates, what she thinks will happen, and how we can all get ready for what might happen in the XRP, Bitcoin, and crypto market. Let's talk about that, because it's a new type of asset. I think banks are taking it seriously. It does look like it's breaking out again, and this time the connection seems to have been close to the market. There are now almost 20 million units still out there. We'll never see more than 21 million, and organizations have only just begun to move in. Because Bitcoin is so hard to get, we think its value will go up. First to shoot was Bitcoin. The NASDAQ and other stock market signs took off after that. It is important to look at gold and Bitcoin, that's for sure. There is a way to compare the S&P to the price of gold, and some people are worried that this is when things start to fall apart. Another measure, though, is the S&P to the price of oil, and that measure is making waves. Gold, on the other hand, has been a much safer trade. When people talk about a huge tax cut, oil gives us a better sense of where we're going. The big drop in the price of oil is likely to ease a lot of pain in the world in a way that many people don't yet understand. That's it. Yes, we have been keeping a close eye on Bitcoin. Just like gold, it's an asset that comes with some risk, but it's also an asset that comes with some risk. In this case, it has been being vague. It doesn't always work this way. During the regional bank crisis, and when we first heard about Bitcoin in 2015, Greece was making threats to leave the European Union. Every time there was a threat, the price of Bitcoin went up. We kept a close eye on it, and yes, there is some risk because it is technology, and a very important technology at that. A global rules-based monetary system with no government control for the first time ever. It's also a new moral class, as I said. We think it's a great idea because AI is making many things less valuable because they are scarce. Even work, if you think about it. More work will be done by AI instead of people, which means that labor will not be as rare as it has been. The market will then look for scarcity value wherever it can find it. That's what people are willing to pay for right now, and we think Bitcoin will be one of those. And you already know that our bull case for 5 years is $1,500,000, and we think we'll reach that goal. You'll see that institutional investment and exchange for gold are the main forces behind this move to 1.5 million. Oh, and the third one is rising markets, which is also very important. Over time, we think that Bitcoin will become more and more important for businesses and consumers in emerging markets. It will be an insurance policy against wealth confiscation, which can happen through inflation caused by bad monetary and fiscal policies in other parts of the world. I think it will be an insurance policy for anyone in the developed or emerging markets, but anyone with an internet connection can buy Bitcoin, which is going to become more important over time. Just like gold, they did split up because Bitcoin has a bit more of a risk-on aspect to it as well. So there's some payback for last year's performance. But yes, it is a hedge, a technology, a new asset class, and a big idea. So yes, I am going to disagree with what I think is becoming the consensus view, which is that the dollar is going to go down. There have been unfair trade barriers, especially non-tariff trade barriers. So if we're right and deregulation leads to tax cuts here in the US, as well as broader-based tax cuts in the form of tariffs coming down everywhere, then the rate of return on invested capital in the US should rise compared to that abroad, and it should be dollar positive. This happened during the Reagan Revolution, and the dollar was so strong that the Plaza and Louvre Accords had to be signed by all treasury ministers around the world, including the US. These agreements said that they had to sell some dollars to ease some of the liquidity pressures. I know that the dollar has been quite weak over the last few weeks, especially since Liberation Day. But if you look at it in the very long term, it is still up there. For example, trade weighted, we were in the 70s about 10 years ago. So now we're at 100, down from 110 or so. So in the context of history, it is not that weak in an absolute sense. But I agree with you that this has been a big move in a very short amount of time. And indeed there has been, and that move is only going to expedite as the Fed prints more and more money, which is right around the corner. Ladies and gentlemen, don't be like the rest of these retail investors that are simply just taking profits right before we hit the finish line. When the Fed starts monetary policy again, just go back to November, look what the Fed lowered rates, looked how it affected the markets. It was very quick, all the way up until January.